Well, we needed something to break us out of this range and get us over the 5,900, and we might have gotten it tonight, especially with the NASDAQ. NQ and QQQ has been fighting that 500 level, and we needed something to push. We're just going to jump right into it because there's a lot to cover. The key driver of any market is earnings. If you have earnings, you can grow into your valuation even if you're, quote, overvalued, right? It is how we always say about the stool. We always want to understand where we're at, whether it's the macro, the fundamental side of the stool, which is exactly what we're focusing on now, or the technicals and how the technicals look. But the most important thing about the stool is that the macro can affect everything. But despite the macro, if the earnings keep coming out and they're good over and over again, it doesn't matter. The fundamentals are telling you that what the macro is doing is either working to affect the fundamentals or it's just immaterial to it. And we're seeing signs of that in some areas. In some areas, we're seeing a little bit of decimation tonight. So let's jump. Now, some of these numbers are absolutely insane, and we're going to just jump into them. It's going to take a little bit of time, but I think it's going to be worth it when people see exactly what happened here. So let's get into it. Alphabet beats estimate. So if you see the revs right here, the 88.2, estimate 86.45. You beat Google advertising 65.8 versus 65.5. Search 49.3 versus 49.08. Ads 892, 889. Revenue 755, 741. So we're firing on all cylinders. I don't think anybody can really state that we're not. But then you start getting into some of the other stuff here, like subscriptions, platforms, and device revenue 10.6. The estimate was 979. So that's obviously a huge bump from what you're looking for. Google service revenue, 76 versus 75. But look at this cloud revenue, 1135 versus 1079. This is really important because this was the driver, but there was more detail than this, and it's worth our time to look at it because it explains why Microsoft and Amazon and some of these other names are just rocking after hours. Before we go into all of them, I'm going to just point out what I think was the most important. Yes, we could see the EPS versus the estimate and the operating income. And we're going to get into that because free cash flow was a disaster for one company tonight. And a lot of people aren't really understanding it. So we're going to explain it. But the operating income here versus the estimate, when you're this size of this magnitude and you do this, this is everything. This is just absolutely utterly everything. And I cannot stress that enough. Like you're doing tens of billions of dollars in a quarter and you're still beating it by 10%. But the most important thing and why all these names are moving after hours is right here. Cloud operating income, 1.95. Estimate 1.1. So cloud operating income. We're always trying to figure out how are they going to make their new, billions. Where's the new revenue source? It's right here, guys. It's literally right here. And their cloud operating income. This is why we're seeing those names explode after hours. Operating margins are up. CapEx is in line with where they're supposed to be. They have so many people working for them. It's crazy. But that cloud operating income is what led to the market ripping. Let's take a look at this. Now, the information hits, and as soon as it's dropped, you can just say it. And pretty much nobody's faster than Bloomberg. You do have some of these other services that are doing a fairly decent job. Street Insider's pretty quick. I'll give them that. They are. But once that information hits, it usually hits Bloomberg first. It hits the tape, and then Bloomberg just does a really good job of disseminating it fast. It's expensive, but they do a really good job. I'll just leave it at that. But Street Insider, it's just as good, for the price point. But here's the point that I'm getting at. Once it hits, you rally, you fall back down. In here is where we bought it. And the reason was simple. Once I saw that cloud data, that was it. That's all I needed to say. And then you can just see we traded up. We did really well going into that call. Then this is the Q&A part. Right here, just so we're all aware, someone just brought up the obvious and said, hey, what's going on with the FTC trying to split you up? And that then became an issue. So what I would say to you for tomorrow's traders and the people that are trading, here is your demarcation line. And that's exactly what I will be using for demarcation. Into the evening, we are up. I would find it really hard to see how they're not going to take estimates up on Google tomorrow, considering that the estimates on the cloud side of the business, which is the growing side of the business, is up double what they were expecting, roughly double. So I do think they're going to have to take it up in earnings crushed. Now, if we look at this technically on a chart, you still have the overhang. But the question really begs on the weekly, like where could you get to? And I'm just going to give you a couple levels in the way that I look at it. I like looking at a weekly, especially after an earnings blowout, because you're going to have a lot of data. But if we look here, you see that 18522, so 185.22 would probably be the first level that I would really look at. And then after there, you have to assume that we have the potential to take out highs on. Now, do you do that in a day? I don't think that you do it in a day, but weirder things have happened. What this did do, and what it's going to do, is it's going to build expectations. Now, disclosure, I have a position in Meta, and I just want to show you this. We started to see it today, and they just started lifting early on, came back down. We actually had some calls that I closed. I do have stock still, but I just want to point this out. Once that data hit, and this is where it's really important, and it's why I stressed the stool, and I stressed on Saturday's video, and I will link it at the end. When did Meta move? At 4:02. So when I say things like you're playing against the most disciplined people in the world, where they have the most discipline, they are the smartest people in the world, they have this entire trade thought out before you even move. They're already understanding that if cloud crushes, Meta and Amazon are going up. So while everyone's looking at Google and reading that, they know exactly what to look for, and what do? They just buy Meta. Just automatic. Oh, that number did X, then we do Y, right? Everything's thought out, everything's proactive, and then they just move. This is why it's so important to understand. Tomorrow morning, other people will come in and be going, oh, I'm gonna buy Meta because it's up $10. Well, the people that knew, they either have been buying, and let's say you weren't one of those, but you knew after that number hit if you did your research. So you're able to get in there a couple dollars cheaper, and it all starts adding up. So keep that in mind when I went through this on Saturday's video. I will link it at the end, but there's a reason and a methodology to this. This is why Meta ripped. This is why AWS ripped. No different. If you go and take a look at that bar, once again, you will see it. You cannot miss it. 402 rips up, and then they just do the flim flam at the end of the day. Rips higher, and then that's it. It's all she wrote. Everyone will come in tomorrow and go, why is Amazon up? It's up because of the cloud service business. I'm going over this stuff specifically because you asked me in your comments. You're asking about, talk to me about swing trades and longer term ideas. If you're not understanding this thesis, and I'm going to get into data centers in greater detail, everything is becoming data centers. We saw it with DLR the other day and how they did with earnings and how they crushed EQIX. Same exact thing. We saw that follow through. Now, we haven't had earnings yet, but it did follow through on the DLR with expectations. Whether it's as good, we don't know. What we do know is the idea that Amazon and Meta are going to have good quarters has now gone from maybe to they better have good quarters, because you're starting to see real money start coming in behind it. And I would expect estimates and earnings estimates to go up on Google. My only thought with Google, my real problem is, did they answer the FTC question good enough? And if we use that level, and this is how I always view it in my head, this is the level where they asked that question. That's when we broke right here, which just happens to coincide here. You're still struggling with it. We'll see where we close at that 8 o'clock and what Asia does with that as well. But I do think that that's a very important level for us to watch as investors into this name. But Google wasn't alone in causing, we'll say, excitement after hours. Reddit, after hours, absolutely slaughtered. Net income, 29.9. Estimated was a loss. So I want to just be really clear what happened here, because this is the kind of stuff that starts turning companies around. When you're expecting a loss and you come in with a net income like this, you want to pay attention. Sees EBITDA 110 versus 125, and they were looking for 87. So if you take 87 and you add 40 to it, you get 125 on the high end. If you divide that, what they're saying is our EBITDA on the high end is going to be 50% in fourth quarter versus what we said it was going to be. That's substantial. Sees adjusted third quarter EBITDA comes in at 94.1 versus 58.9. Revs, 348 versus 312. ARUP, they don't give you an estimate for these, but they do give you one here, 358, 322. When I say they crushed. They absolutely, unequivocally crushed. And then after they crushed, they're like, oh, by the way, mic drop, 356 was the estimate. Yeah, we're going to add 10% on a quarterly basis. So what they just did there was something that we just saw, and we saw someone do this called NVIDIA a long time ago, and I don't think they're going to keep doing it the way NVIDIA can. But that said, you never know. But to come out and have a number like this, and then you're going to crush it, and you're not going to sandbag any, and then you're going to come out with another number like that, they're telling you there's a lot in the tank. And I would pay attention to this. It's really very interesting to see what's going on with this company. I'm actually surprised by it. I don't know, what you kids are doing on that Reddit. Usually I go in there and someone just yells at me, so I don't spend a lot of time on there. But nevertheless, you kids are on there and you're having a good time apparently, and they are making a lot of money off of it. So take a look at what the chart's doing. Now, after hours, you've just dropped the VWAP, and this is why it's so important. You want to be somebody that's buying this after hours around 94, 95, even if it takes you that long to get it together. Or you want to buy someone that's buying it at the VWAP, setting your levels up, right? Or you want to be the guy that's buying it at 108 tomorrow. That was the whole point of Saturday's video, guys. Whether you like it or not, this is the reality of trading right now. Okay, and you can see how it's acting at that level. So you probably want to watch that tomorrow, that 102, I think it's 102.20 to be exact. So I'd watch that 102.20 level and go from there. Technically speaking, this is just going to crush. It's going to crush all the numbers, and then everybody's going to have to take their numbers up. Anyone that's an analyst that follows this has to take those numbers up. They're not going to have a choice. So you have two major drivers that are out there right now, and you have one that just absolutely just did not do well. We're going to cover that one right now. Now, before we do, I just want to go through this. There were some honorable mentions out there. You're going to see Snap trade itself up. What I would do with Snap tomorrow is just watch these core levels. And I really would pay very close attention to these core levels and just watch it. Can you get up to that 1250 and go from there? This was a good report. It's no Reddit, but this was a really good report. And I would pay attention to this. But I think that there's bigger fish to fry. But you have a bunch of people short this, and you might see some action. Also, I did not think Chipotle, and I called the company. That is the right way to pronounce that name. And if you look here, they were just down a little bit on revs, and some comps were off a little bit. And they got a little frisky here right off the open. And again, this is why it's so important, the after hours trading and even pre-trading this stuff, to understand it. Once you got down to this level, you were down here for 1 minute, and then everyone said, wait a minute, it's not that bad. I don't really understand. The comps weren't that awful. Using this as a guide, you could just very simply just drop a VWAP there and just see, once you flip that VWAP, that was it, and then you just stayed higher. So I would use these as honorable mentions. There were a couple others out there as well. But the real big ones, like this QRVO, it was a little bit of a disaster. I think our time is much better spent focusing on AMD and what the heck was that. So with AMD, if you look here, they missed on the earnings. What really killed them, like absolutely slaughtered them, was their free cash flow. It was just a dumpster fire. Let's get to it. Now, after hours, they would give a little bit of guidance here. 7.2 to 7.8. The estimate was 7.55, so they're in line. Insatiable demand for more compute. I don't really know what that means, considering what we saw happen out there. It's hard to say you have insatiable demand and your estimates are in line. Some of these numbers just don't match up with insatiable demand for your product. Maybe for someone else's product that begins with an N and ends with an A, but not with one that begins with an A and ends with a D. But you look at the third quarter expenses, they're revved up a little bit. Their operating margins are 25 versus 25.4. If you have insatiable demand, you're able to charge more for product. If you're the only one with a pen, you can charge $100 for it, not $1. Therefore, your gross margins would be up. That doesn't sound like insatiable. Operating margins, 172 versus 171. 92.92, CapEx 132 versus estimate. So they're not even spending. Third quarter revenue 6.8 versus 6.7. All right. And so you'd look at this and go, well, it's not that bad. Well, just hold on to your phone. I don't know if that's a saying, but it is now. So then, again, we're just going to recap everything here. You're going to look at client revenue, embedded revenue, right? And it's not really that bad. But the adjusted gross margins, 51 versus 54 versus 51, and the estimate 53. It's not the end of the world. CapEx, operating income, not bad. Adjusted margins, not bad. And then you hit free cash flow, and you're like, what is this? Free cash flow, 496 versus 118 estimate. So I just want to explain why the stock's down so much so that you can understand it. And then you're going to see me not draw a stool, but you're going to see it in your head. On the fundamental side, this is 1/3, roughly. It's not. I know. Someone's going to do the math in the comments. But roughly 40% of that number. Your free cash flow is not even close to where it's supposed to be. Not even close to 50%. This is a massive issue. It was not addressed on the conference call, and they just kind of blew it off and said, talk about insatiable demand for data centers. Yeah, I know data center revenues are up. Anything data center related, anything like that on the side of a Microsoft or a Meta or a DLR, any of those data centers or the data center watch list that I've created that I put out for you guys, those names are on fire. NVIDIA's chips, on fire. AVGO, on fire. This is not on fire. This is a real issue. And their free cash flow, and she keeps riding this, it's not working. And this is a real problem. And this is from somebody that had some calls on this today. Now, I rolled them up, so I made money on some, which paid for these. But it doesn't matter. Either way, the trade just did not work. And into the call, it was a bloodbath. So we had a real interesting position here, and we started buying it a couple days ago. And as it came up, the call started working. So when we had a double, we took them off, and then I just rolled out into 170s and 175s. So I'll still lose the profit, but it gave me the opportunity to be in it. But after hours, this was just a bloodbath. As soon as I saw the free cash flow, I just put it out there in the room like it's a real problem. So once you see that, you're toast. Now, can this lift? Look, it can. But you have a lot of issues out there. And the question is, why bother? And I think that that's going to be the real rub with everyone. Yeah, you're probably going to get the short sellers that are going to bother tomorrow to cover. But why bother? So the first thing you saw as the call went on, and I think this is important, NVIDIA sold off, and now NVIDIA is back to right where it was. But if we look at what happened after hours with Google and how Google's acting, whether it can get over that 82 or not, we'll see what happened with Meta here and how Meta keeps grinding and Amazon keeps grinding. And these names that are all associated with data centers keep grinding higher. See the themes? Once you understand these themes, your life gets a lot easier. So we have these names that are grinding higher, that are setting up for the next earnings. Why are you buying AMD? Right? So I think that you could rally on the short squeeze, but I think if you focus on the themes and where the puck's going, you're going to do a lot better. These videos this week are going to be hyper focused on the micro. As far as the JOLTS data, it's not really worth my time because a lot of that can change next week. That's it.